what I was saying about oil. This is the decline since 2008. This is the low at 2016. And the price is approaching that prior low that we sprang up from. As long as the price stays above this low right here from 2016, all will be somewhat stable. It won't, really, it won't get too much worse than it is, put it that way, if it stays here. Let me see where we are. This low is 2605, and this low is 2734. Okay, so far it's above it, which would be good if it stayed there. Let me go down to an hour. Okay, so needs to start making some higher highs here. Not doing it. Got a gap down. That's not good. A space between gap. It didn't have a gradual progression. That's panic selling. Okay, panic selling creates a gap. So usually when people sell, they're sitting there messing around about the price, trying to get the absolute best price. When you see this type of movement, people are saying, sell, get me out. I don't care about the price, just get me out now. Get me out now. Now. And so you get that kind of action. People don't even care about the price. But this is the low we're looking at from 2016. That's important from a technical level. And the other chart I showed was the S&P 500. This is a 15-minute chart. So this is where we had declined to the low on, what's this, February 28th. So we had a little optimism going as we kind of made our way back, a little bit, and we've been falling since the 4th. And then Friday, we ended on this optimistic note here when this high exceeded this high. And then we opened today in the futures market, and you saw that same kind of panic selling that we saw on the oil chart that I showed. Okay, and this was the gold chart that I had showed. Okay, so let's see, we're looking at a 15-minute chart. This is a nice little run in gold from the 23rd, 28th of February. And so this is the high since, I believe, like December of 2018. So that would be what, about 15 months high. And I'll do my 5 count, the chart that I ruined because I wasn't sharing the screen. So this is what kind of had me watching, kind of concerned. Got a little 5 count here, which put some pause, some concern in the game, some pause in the game for gold. And in this fifth wave, it's not very high above this third wave. This is a kind of a truncated move. And we can see right here around 9:45 last night is when this thing started dying. So what's important is this low here, right here from 10:15. What is this? 6987 Friday, Friday morning, 10:15. If that holds, if that holds, then the bulls can have some basis for being bullish. But if we go below this point, then that's going to set off technical alarms to sell, and they won't care about price. It won't be an orderly sell. They're just going to want to be out. because there's still a belief that gold is safe. And people that listen to this channel know I don't believe that. All right. So we got this diagonal line. That would be a warning that maybe this one is next. So that's what the watch is right now. Let's see what else I want to look at. Okay, what we got? What's up, Maddie? What's up, JBA, Mega Montana? Yeah, man, JBA. I've been like, this dollar been killing me. It's not doing what it should, and I thought this thing would have died a long time ago. I'm surprised that gold is holding up, but yeah, TZA, Maddie, TZA is gonna be off the chart in the morning. That's going, the thing about it though, it's like this is a market for technical traders because TZA is going to break somebody's heart, and TVIX, because the way that this thing is falling, the way that it's dropping like a knife, it's going to hit a technical level and bounce north just as quickly. So if these traders that don't know technical analysis, don't know the kind of stuff that we talk about, Maddie's a trader. Maddie is hanging out with me. He's studying the technicals to go with his fundamentals, and JBA too. So if folks are not sound in their technical game, then TZA is going to turn around and rocket right back up. They're going to end up losing a lot. It's not going to go up to the top, but it's going to have at some point this market is going to recover 50%, about 50% of these losses. And that's the kind of stuff that I talk about on my Patreon, kind of project where that's going to be. But these big moves like this, you got to watch that every day. That's the deal. And you can't set and forget when you buy like TZA or TVIX or DUST, any of those leveraged ETFs. You can't mess around with that. Let's see what else we got. What's up, Chaos Rain? Jay Charles, brother. I was talking to Jay Charles tonight a couple hours ago, and we were talking about gold, and I was telling him how concerned I was because that thing should have fallen. Charles, Plan A is back in effect. My confidence in my earlier call has been restored because how it fell. Yeah, I'm going to show some charts. Let's see now. All right. TNA has the same chart pattern. Whoa, TNA can't have the same. Does it? TNA is not opposite TCA? Well, we're going to take a look at it. Well, this is going to be from Friday, so it's not going to be, it's not going to show, tomorrow till tomorrow. Let's see. Let me just call this test. I don't want to save this. Let's see, TNA. This is going to be as of Friday, so it's not going to show you anything about today. So this is a small cap bull. So bullish ETF for small cap. It's in the dirt like it should be. We put it back to the daily, right? So the deal is, will this thing take out this low? Now, what's scary about this? The major index is the S&P 500. That's a large cap index. Okay, so this particular fund is a fund of the small cap. So that's just smaller companies. It includes what does the small caps begin? Is it like 250 million or something like that? Like your Russell 2000 kind of stuff. That's what this is. So companies that generally they're not going to have the money to make it through any kind of market turbulence. So they would be the first on deck to either get bought by another company or go bankrupt. So in troubled times, I like to go after the slow runner, like the lions do, and go find that slow runner. And so that's why you see this thing dive. But what's suspicious about this? Look where it peaked. This is 2018? Yeah, it never. So yeah, because I had gotten in this way back here, but I was always concerned. Why didn't it make a new high like the S&P 500? And I was always concerned that this, like I was in it way back here, but I was concerned that this might make a new high right along with the S&P 500. It never did. So the small caps was telling, us way back when that this market was problematic. Had some trouble. But that's TNA. So whoever said TNA looked like TZA, I don't know how they saw that, because this thing is in the dirt. Now we're gonna look at the one that goes up when the small caps go down. Now these are highly, highly risky, family. Highly risky. These things are triple leverage. So whatever amount the small caps go down, this goes up 3 times that amount. But like I said, it will turn around on you and fall just as fast. So this is one that talk to your financial advisor about it. But I only show you this just to make the point, just to make it clear that somebody's always winning. So even when you see crazy stuff, on TV about the market imploding, prices going to hell, I just want to make the point on my channel that, hey, somebody's always making money somewhere. So no, everybody's not losing money. And what these symbols do is they go into the futures market and bet against the market in the futures market. So that limit down in the S&P right now, there are people shorting it over there, and like some of this fund would be shorting it. The money managers of this fund would be over there shorting it, making this thing rise tomorrow. Okay, so they these triple leveraged bear market funds were created so that people could take advantage of action in the futures and options market without knowing how to trade futures or options. So, but again, it's highly risky. Talk to your financial advisor about this kind of stuff. Let me see what we got. Well, yeah, TZA is basically short is a way of shorting TNA. It's an inverse of that. Yeah. Yeah. So TZA is a way to short TNA, So that's what that is. But now what else I want to see? But yeah, we won't see what this is doing until the morning. Now, we got this high right here, critical high here, which would be good, which tomorrow it should go higher than this, and that would put this particular high under attack. And so we're talking about, this is $93. This thing started down here at 33. So, in a minute, this thing gonna be looking at a 200% gain. It's moving like a penny stock. Matty goes. Moving like a penny stock. Let me see what else. It was something else I wanted to look at. I think it was I wanted to look at the 20-year bond. That's what I wanted to see. I wanted to see, do they trade? I never really looked at that as the futures symbol for that. I want to see what do they call that thing over here? US10. Let me try the 10-year. I don't think I'm gonna get that price. Or will I? I think that opens in the morning. Let me see what this is. I'm sure there's probably a futures version of it. I'm gonna go to the futures. It was the ninth. Oh no, it looks like this is it. Let me move this to the line. No, I want. There you go. All right. What this is, family, why this is key, and for from my perspective, which is I'm bearish the market and some of the projections I was making, this is doing what I thought it would do. The bond, all right, there are two types of bonds: the old bonds in circulation, like when the interest rate was high, like years ago. Those old bonds got sold, and they get sold until they mature. And so it's like the current interest rate is trending down. So interest rates from years past, they pay more. Those bonds pay more when redeemed because the interest rate was higher. And so there is a bond bubble uh, right now. And let me show you that. There's a bond bubble. And that's what everybody is fearing also. That's the other shoe that everybody's concerned about. That's going to really cause these markets to really go to hell. Is when this bond bubble bursts. And that, all right. So this thing has been running high. This chart doesn't show it all because this ETF wasn't around. But this thing, if you would have to go back to like 1980, 1982, I think 82. And this just looks like Superman like this, okay? And so this is an ETF for that bond. So for people who want to trade that bond but don't want to go into the bond market, you can. So if you know this symbol right here, pretty much trades. It's a collection of bonds with maturities 20 years or more. So your 30-year mortgage, 30-year bonds. I don't want to say mortgage. 30-year bonds are in that, and so it was a good way to make money because with the current interest rate going down, the difference between the current rate, meaning like it's like every month or so. I think it's like every month. The federal government sells bonds, raises money by selling bonds, and so as the new bonds come out with a lower interest rate, that increases the value of these older bonds in circulation. And so everybody was saying, okay, this trend has to end. Well, the fact that 10-year bond looks like it bottomed. Let's see, that US. In fact, this thing, this right here that we were looking at earlier, the fact that this downward trend seems to see, yeah, you can see it here. This is when it started. This bond yield, they call this the yield interest rate. Bond yield has been declining since 1981. Okay. Now, I thought this was the bottom before, but we'll see. This could be it. But the real confirmation of it is put a basic trend line on it. And I'll be watching this over the next couple of weeks. But if this trend line breaks, we really going to hell. Because the government, was earlier last week, they had an emergency interest rate adjustment lower. So although they lowered the interest rate, this thing could rise even with lowered interest rate, because with the S&P knifing like it is, people will run to some safety, and this is one of those places where they normally run. They run to loan money to the federal government. They'd rather loan money to the federal government, even at this paltry interest rate, because they know that their principal is going to be protected, because the federal government will raise taxes on the citizens if necessary to raise that money. So they're not worried about it. So it's, it says a lot that they lowered the interest rate and people stepping in and buying this thing. So when they first lowered it, the price dove. So we gotta pay attention to see if this yield rises above this point here, because this is about when they made the announcement that they were lowering the interest rate. So if we make a higher high above that, then that would be a sign of the market saying that it doesn't care about that interest rate adjustment. That the interest rate adjustment is not having and is not deterring people from buying this. They're gonna buy it anyway, and that bond bubble gonna break. But but it hasn't broken yet. Don't want to count the chickens yet. But if we see more money piling into this as gold declines and as gold is revealed to not be a safe haven, and the S&P is not safe, of course, the only things that's really making money is those short ETFs, those are bear market ETFs, and possibly this for now. But at some point soon, your grocery stores are going to be okay, but they are overbought. They need a little haircut, so I don't think they're going to keep falling. There's some things like your tech stocks, they're going to be falling for a while, but some other things like your grocery stores and your food stocks, your center aisle stuff, your Procter and Gamble, Nabisco, Pillsbury, Pepsi Cola, Coca-Cola, those kinds of food stocks. Those things are going to find a bottom, and they will be attractive. And so that type of stuff is what I look at when everything seems to be going to hell, because there is an order. There is an order underneath all of this, even when it looks like chaos. But there's a method to this. It's just moving at warp speed. That's all. All right, Maddie. All right. Cool. Okay. What we got? But yeah, I just wanted to pop this up here. Okay, mid-dawn. Oh, this is from way back. So everybody's asleep. So y'all are up with this news right here. Everybody else is kind of just going, chilling. They're gonna wake up in the morning and they're gonna see horror. But I'm a bail on it. And if I get another second wind or a bit of news, another perspective that folks need to pay attention to, I will fire it up again.